Yet another one of these live videos. We're going to be covering what's happening in the market, what is happening with specific companies, what's happening with Bitcoin, what's happening with anything else that people bring up in the chat. So make sure you ask lots of questions. If you have any questions, make sure you contribute. It would be great to have people's opinions and views, because I have my particular views. Everyone else has theirs. I was just answering somebody's comment actually. I made a video about AMD earlier. I think it was two hours ago, I released a video with my particular valuation on AMD and why I'm invested in them and why I think there's a big upside. And I showed the numbers behind it, and I showed what I feel like a good, effective, like valuation would be based on my personal opinion on the direction. But, other people have different views, and somebody was saying, hey, I disagree with your growth projections. You're saying they're going to be, they said 600%, like it's about 540%, I think, growth from 2021 onwards. That seems incredibly bullish. And I'm kind of saying, well, yeah, I mean, people can disagree, and it's very, very easy to just go and follow what somebody on YouTube says or what somebody shows you, especially if they're throwing numbers at you, especially if the video format is a bit similar to the kind of videos that I do, where, I'll go and talk to you and I'll show you lots of numbers. I'll show you, hey, they're doing this, they're supplying to Tesla, they're supplying to Microsoft, they must be doing really well. Look, here are some numbers. And it all looks really convincing. But the video is very, very easy to make look convincing. It is very easy for somebody like me to go and put something together, which makes anything look compelling. I can go make a compelling case that AMC is a good value buy. It isn't. I mean, there's a whole separate debate as to whether you want to partake in a short squeeze, etc. But you can go and have the same kind of conversation. I can craft something that makes it look like you should go and invest in something, but that doesn't mean that you should. So anyway, let's go and look. Today is going to be another one of those green days when things are looking good by the sounds of it. Let me just go and refresh this, and let me go and jump that on the screen so we're going to see what's happening over here. And it's interesting, like all the tech stuff is coming back, but generally the market is green overall in pre-market trading. Some big movements at the top are sort of in smaller companies. I certainly don't have any big movements today, but look at this. Tesla is up 1.4%. Apple was up more earlier, but Ford is back up. Ford is yo-yoing. There's a lot of different reasons. We can probably discuss that at some point if anyone's interested. Then we have just generally across the board, small movements upwards. The question is this going to sustain? Is it not going to sustain? Actually, an hour ago or 2 hours ago when I last checked, these numbers were considerably more green. I think a lot of these were over a percentage point up. So it will be interesting to see what happens, because pre-market is often a really bad indicator of what actually ends up happening in the long term. But anyway. James is asking, hey Sasha, before the market's open, do you have any new information on Monzo, as you've made videos in the past where the numbers are looking a little shaky? I do not at the moment. They publish their annual results. I'm expecting it to be at the end of, I think it's at the end of July. I think it's 27th, 28th, 29th of July-ish. So we're still about a month away from when that happens. And unfortunately, they don't really publish very much in between other than very, very generic stuff. Having said that, since I made the last video about Monzo is a UK challenger bank that has become sort of the biggest challenger bank that every young person seems to have a Monzo card. I have a Monzo card. Lots of people have one of them. They haven't been doing very well commercially. They've been doing very well on getting 5 million, 6 million customers, but not much on everything else. But they have collected a huge funding round since I made that video. So they're kind of like financially, commercially not doing as well maybe as they could be, but they've collected a ton of cash, which should easily see them through for probably another 12 months from now at the very least, in which time hopefully, so that they have in the last 2 months been moving. Their lending has improved considerably, although it's still, I think, got a long way to go. So perhaps this new CEO that they have come in, there's probably a whole video worth of content there that I can talk about. But anyway, we'll find out in about a month's time. Let's just quickly talk about Bitcoin, because yesterday we had the exact opposite scenario happen, and yesterday I was making a video. Let's go and quickly have a look at what's happening today. As you can see, all crypto is bouncing in a big way. So we had this big ramp up over here, which was about 1 a.m. midnight UK time, so evening yesterday New York time, where everything was bouncing. Obviously everything is kind of dependent on Bitcoin, but everything like in the crypto sphere is bouncing the big way. Yesterday, when I was making the video, the live video in the morning, things were going in exactly the opposite direction. Bitcoin, I think, lost 16% in like 2 hours or something. And it's kind of interesting that it's bouncing back, because I still think that we're probably still in that early fluctuation stage after the big peak that will then go somewhere. I could be wrong. We could be seeing an even bigger peak before that happens. And some people are saying that is going to happen. But the interesting thing for me, I think the really, really important point for me is, on top of the problems that we've been seeing with Bitcoin regarding the viability of it as a processor of transactions, because there's no layers above that aggregate them, and because it has a relatively low cap, and because of the energy usage, and because of the legal issues where countries are banning it, because, like in China, they're stopping the huge mining farms, etc. All of these issues combined are kind of bad in their own right. But the real kind of trouble for me with Bitcoin, because we need to begin valuing it as an asset and really thinking about its utility and the use cases, is the fact that this kind of fluctuation, where we can be intraday easily trading at 20% fluctuations up and down, like we're up in a day 16% today, we're down in a day 17% yesterday, whatever it is. These are not healthy. And certainly if you look yesterday from the bottom over here, it went below 29 within that time frame over here. It was like trading at 28.5-ish for a short period. And then later in the evening, it goes back up to 35,000. Hey, Tom. Thank you. I was waiting. I was just biding time. But now Tom is here. We can start talking for real. But the fact is, if something so different people see Bitcoin as a different kind of thing. And if you see it as a potential currency, because the majority seem to see it as a currency that will replace the dollar, right? You'll replace all these outdated currencies that are all going to die. They're all going to go away. Nobody will ever use paper money or all this kind of stuff in the future. I know the arguments. But the problem is that 12 years down the line, we're still in a position where, despite the immense growth in value, or price, should I say, we're still in a position where you have like 25% or more price fluctuations within day, and that's normal. This is happening. This is like people don't think it's any kind of weird. So as a form of currency, as a form of being able to buy things, as a way of storing value in a currency, which I think is really important, because people I think that's probably the biggest use of currency in reality that people kind of forget, which is, I go and sell something, or I go and provide a service to somebody, and when I go and provide that service, I get paid in return, right? So I get something which is the equivalent value of the service that I provided, worked in a company for a month, and that value lands in my bank account, less taxes, etc., and then it sits there, and then I can go and exchange that for something else. I can go and exchange it for food, I can exchange it for paying my bills, I can exchange it for other things. But if we have fluctuations of any magnitude, even remotely close to what is happening with Bitcoin at the moment, you can't really use it in that way. And some people will argue the counterpoint, which is, hey, once the use of Bitcoin establishes and more people are using it as a currency, and more people are beginning to use it in that way, then those fluctuations will reduce. And that's kind of like a valid argument in some ways, together with the fact that would probably push the price up, because there'd be more users / more holders, and because there's a limited supply, that would kind of inadvertently, that's certainly what Kathy Wood over at ARK thinks. But unfortunately, I am not necessarily sure I agree that the timescales of this happening are as soon or as quick as because the same arguments were being posed 2 or 3 years ago about Bitcoin. The same arguments were being posed 8 years ago, 9 years ago about Bitcoin. People saying, oh, it's about to explode. We're like, in the next 2 to 3 years, it's going to begin taking over. And the fact is, adoption has not really taken off. Sure, like 1 or 2 big companies go and say they're going to begin accepting it. But the truth is, even when they say they're going to begin accepting it, that doesn't really usually materialize into them accepting it. So you have I think like 5 or 6 years ago, some big US electronics store said they're going to accept it, but people couldn't actually do it in store, and you had to go via a weird roundabout way. Tesla made a big load of noise about it, but you couldn't go on their website and go and just buy stuff just like you can with dollars in the same way. So I think Kathy Wood OnlyFans. I'm not a fan of Kathy Wood. I have a whole video about that nobody watched. No, I'm not. Actually, I said that wrong. I'm not a fan of the obsession of that people have with personalities like Kathy Wood. I think Kathy Wood is a great person. I think I think I agree with her on most of her mentality with investing, and I invest in very much the same kind of stuff on average. And I have a very similar outlook on life, I think, to what ARK Invest, for example, has on lots of stocks. But I think it's unhealthy for people to have this personality cult obsession, and it's kind of weird because, you know, like I've put Kathy on a recent video in a thumbnail, and the reason I do that is because the majority of people that's what they want. They want to go and follow what people are doing, what people are saying. But anyway, one sec. So yeah, so it's interesting. So we're going to talk about stocks in just a second because the market is going to be opening in 3 minutes time. But while we're in this topic, Anomalous data point saying, without sounding like a religionist, don't you think BTC is the only crypto that can realistic value by comparing it to gold? I don't. It's the first one. It took market share, essentially. It sort of took because it was years ahead of basically any alternative competition, and in terms of adoption and in terms of use. But the truth is, if you take a step back, so even if you're a big believer, and I love Bitcoin and I love the concept and I love lots of stuff about it, but if you take a big step back, I'm like the thing with gold is, if we live on Earth, there isn't an equivalent exact alternative that you can go and create that has the same properties. You might not have the same value, the same price, but you can't go and create something that is sure, you can go and use palladium, you can go and use some like other things that are similar to gold in some ways, but you're not going to have something identical. Bitcoin, you could go and create some. So I see the uniqueness, and I see the fact that adoption is what separates it from a clone that would do the same thing, and its history and its like all the community, all of those things. But that doesn't still, it's not the same. It's a different class of asset, and we need to treat it as a different class of asset. Anyway, let's go and quickly look at what's happening with the pre-market just before the stock market opens. Unfortunately, I don't have a good enough set of tech to go and hear the bell ring. We will get there. We will get there as soon as the channel grows a little bit, and we can have a few more people watching so that we can actually buy one of those big switches. We're going to get there, but the market is looking remarkably green. What's happened with Ford? I haven't actually followed Ford this morning. I was too busy running my model on AMD. By the way, if you haven't seen that video, go and check it out. I know Tom's seen it. I think we have a very similar outlook on AMD, and actually a very similar target price, I think. I haven't looked, but I would be surprised if it wasn't quite similar. I'm amazed. If you haven't been looking at AMD or you haven't watched that video yet, it is incredible. So here's AMD. Here's its share price. Let me show you that share price over here in time. Oh, what's happening? It's not. I need to zoom out further. Here, look, the share price was trading higher than it is today at the beginning of August 2020. That's almost 11 months ago. And in that time, quarter on quarter, they're posting 45% growth. They're scoring new clients. They've just scored Tesla, and they're going to be producing the chips that are going into, I think, all the new variants of all Tesla cars after they're revamping the batteries and installing those gigapresses. So all the new versions, they've scored Google Cloud. They're going to be building an entire Google Cloud site powered only by AMD. If you go on Google Cloud, I actually, the reason I picked this up is I manage a bunch of servers because I have websites as part of my online content stuff. And you can buy a more powerful AMD-based processing unit for about a 15-20% discount versus the equivalent Intel today on like the major US cloud servers that Google runs. The power is pretty insane, but for whatever reason, and this is the beauty of investing, the stock market moves in mysterious ways. The power, you can have a target price, and my target price today is definitely very different to what it would be 11 months ago because of all the stuff that's happened in that time and all the things. But the market hasn't moved, and there's a million different potential reasons why that is. But it doesn't really matter because somebody asked a question earlier. When do I think it will hit the target price? And this is, I think, the difference between, say, how I would be thinking about this and how maybe some less long-term investor, or less maybe sort of like people who are more in the tradery mind, or people who are maybe just looking for short-term wins. I don't have a time frame necessarily. When I go and do evaluation, all I'm doing is I'm saying, if I had to go and make a value, so without even knowing what the share price for AMD is today, if I had to go and place a value on it, and say, how much should it be worth? What would that number be? And that's a really good exercise, because then you go and do the math, you go and do your own research, you go and then you say, okay, well, I think that today a fair price for what I think the potential is and where I think it might be going is X. And if it's substantially below X, I'll be buying. If it's close to X, I would definitely not be buying. And if I held it, I would be selling. And it just so happens that when I do these, in the majority of cases, the price is at, or maybe in some cases above where I want it to be. And so for me, like, that's not a particularly interesting. I probably will be doing a video about that maybe day after tomorrow, because there's a company which is so horrifically overvalued that is entering the market, that I think I need to explain to people what overvalued really looks like. But here, in my opinion, the company is severely undervalued versus what I think the price should be. And we're live, by the way. We're live. I completely missed it. And AMD is swinging in the first few minutes, but not really moving very far away from where it closed. What's happening with some of the other big stocks that I'm invested in? Let's go and have a look. What's happening with Tesla? We're on 1 minute. Tesla has not moved from this like early 620s mark for a while, but look at it. Look at it in the first few minutes of today, we're up to 638. That is a very big jump. That is a very big jump from that's a $15 jump from when we closed. That's 2.5% or so, and we're climbing further. This is pretty good. This is a big look at that, 639. I'm drinking my tea and earning money. Tesla is still, and if Tom is still watching, he's going to berate me in a really bad way for this. Tesla is still over 50% of my portfolio overall. It was more than that, but it's been reducing as I've been buying other stocks. And it's simply just a case of accident, because for me, the upside on my valuation is so ridiculous that, and the relative level of risk compared to some of the other places where I think there is a big upside is actually not as big here for me, because they have so many different paths and so many different factories being built, etc. So I just kind of had to put the money there because the market forced me to, and it's reducing slowly as other good opportunities are turning up. But yeah, Tesla is climbing back up. It's crazy that we're talking about it climbing back up at 640. I remember when it was dropping below 700. And it was like people like buying hard at the 720 level, saying, "Oh my God, this is the cheapest it can ever be." And then it went down to 540. But there we go. Somebody saying Nvidia, yes. Okay, let's go and look at some of the other semiconductors. And it looks like, so yesterday we were looking at the exact same set of charts, and we were looking at the semiconductors. And Micron was down, and everything else was down. Look, Qualcomm is jumping up, and I was just saying, I don't get it. I don't see what's happening in the market. I don't understand the market sometimes. Like, there's a bunch of big, good news coming out. There's really positive signs. There's really interesting things that are happening in the market. So how come is it? You know, what is the reason? And I just couldn't see it. 1 second, I'm just trying to make sure that my screens are working properly over here. But today we're seeing these at opposite, and that's the beauty of the market. There are so many things happening behind the scenes, people moving money, funds completing on their compulsory purchases, blah blah. There's a million different things happening. Rohanul saying, I'm still 9% down on Tesla on FREETRADE. Well, a lot of people are, and on some of my portfolios I am down on Tesla because I hold it in different places and I bought it in different places at different times. It does, like, in the long term, you need to go and make your own decisions as to, you know, how you're happy to invest. But the one truth in the long term is that time in the market always beats trying to time the market. And truth is, it went one way, but it could easily have gone a different way for reasons that none of us will ever know or understand. But anyway, what's happening with NVIDIA? Because somebody got very excited about NVIDIA. NVIDIA is there's not much in there really, like a fraction of a percent up, but sort of like, NVIDIA in my portfolios is kicking ass. I hold quite a large chunk of NVIDIA in my pension, because my pension is with FREETRADE. By the way, if you're based in the UK, FREETRADE offer SIP pension accounts, which are unique because it basically allows you to do the same as with a regular invest account, pick all your stocks or invest in the index if you want, or invest in whatever it is that you want with your pension money, which is incredible. There's no other product even remotely like it in the UK. There are other SIP accounts, but they don't let you do like what you can do. It's basically having an invest account where your pension money sits. I love it because it actually allows me to have a pension that grows by, you know, whatever the market grows by, rather than whatever the fund delivers. So I think like some pensions last year were posting single-digit returns when the market was getting 80%. This is unbelievable. And this is a scandal that this is allowed. They're charging people money for it as well. And they're just preying on the fact that most people don't care. Most people don't even know what their pension's invested in. Most people don't understand how pensions work. But it is really quite astonishing that we live in a world of, look, Tesla's up to 643. And if you want to try it out, you can do so. You can actually deposit money into the pension, and then at the end of the year, you can go and claim the money back through doing a self-assessment. You can get your tax back. They'll get the basic rate of tax added to your pension, but then if you are a higher earner, you can claim the rest back. But you can also transfer any other pensions you have into the SIP account if you choose to do so. And if you use my link in the description below, you also get a free share when you sign up to FREETRADE. You'll get the free share in the invest account, not in your pension, unfortunately. But it's still a free share. So if you're interested in trying it out, I am a big fan. I worked in a lot of different companies. I started out kind of in one, and then I moved around, and I ended up having, I think, like 5 or 6 different pensions after I already aggregated them back down. And then I went and moved them all into FREETRADE and I am so happy that I have. It's just so much nicer, so much easier, so much. I can like within the day move my money within my pension between different things if I choose to do so, or keep it in there for years. It's kind of up to me. And the fees are exactly the same as with the invest account, except you have to pay a monthly subscription fee as well. So it's only really worth it if you're going to move quite a lot of money into it, because if you're, say, only have a few £1,000 or planning to put a few hundred, it's way too expensive. It costs $9.99 a month to have the pension account. But it's a flat fee, which is great, because if you are a person who's already worked for, say, 10 years, and then you want to move your money into the pension, then that 10 quid per month, it doesn't go up. And so as a proportion, so if your pension is like larger or becomes larger over time, as a proportion, that reduces and becomes actually really quite cheap. And say I'm paying now less than I would in a management fee for any other pension provider, but with the capability of earning far more on it, which I'm a big fan. But anyway, I'm guessing most people don't really care about pensions, but you should. Your pension is probably the second biggest investment you will do in your life, other than property, like the house that you're buying. But for some reason, we just don't pay any attention to it. And we really should, because the difference between being invested in, say, the stock market that grows at 9% a year and a regular pension that grows at 4 or 5% over the long term when it compounds can be a factor of 3 on the amount that you'll receive from your pension when you retire. Which, like, I think some people miss it. Like, it's like it could be the difference between earning, like, say, £10,000 or £12,000 per year from your pension to earning £40,000. That is a really big difference. And I think some people don't quite comprehend the difference that it would make to their retirement if they just took the time to try to understand where is their pension sitting, what is it invested in, should it be invested in it, are they happy with that choice, can they get a better choice somewhere else? I think people need to pay more attention. At the same time, I have another video which talks about why UK pensions are bad if you put too much money in, so go and check that out. Anyway, let's talk about the stock market. That's what we're here for. What are people saying? If I make an ISA account on FREETRADE, will my holdings from my standard account be able to move over? No, I don't think you can do in specie moves from outside an ISA to an ISA, and that's not even a FREETRADE thing. It's just because purchases within an ISA have completely different tax implications. So you have to actually exit your positions in order to essentially like bank those capital gains, because you'll have to, and unfortunately that means if you hold non-pound based things in FREETRADE, that means you'll have to pay the fees in order to do it, and then fees again to rebuy. So moving from outside an ISA to an ISA is not a very clean or very good thing. But anyway, look at Tesla go, where it's $643, and we're sort of seem maybe to be settling at this, but that is a big move. We're up over roughly $20, so 3.5% or something like that. That's quite noticeable. So if, like me, you hold a lot of Tesla for whatever stupid reason, you are looking at this and you're feeling quite good, because this is everything at the moment. I need to dilute, and I'm glad that Tom has departed, obviously, because he isn't berating me for this. But I need to dilute more, and I'm hopefully gonna do it if Tesla share price begins climbing more, making it less attractive. It's kind of interesting. I have made a video recently, not recently, maybe 2 or 3 months ago, where I cover a few tricks that you can employ in order to increase the returns on your investments. And I think some people really overlook little things that you can do, which aren't trying to time things, which aren't trying to do something like, get crazy returns in a short space of time, but things that can really go and make quite a noticeable difference to the returns you're getting. And one of the things in that video, one of the things that I talk about in that video is selectively buying stocks that are particularly undervalued by the market at the time when you happen to be putting money in. Because most of us are not like rich people who can just at any point go and dump £10,000 into their investment account or $10,000. And when you have, when you're in that position where you're moving, small amounts of money in, there's naturally going to be a position where some companies at that point in time are like a bit higher than they have been recently and sort of at the crest, and some have dropped, but there isn't a material reason why that's happened. There isn't a long-term reason why some of these things are happening. And if you go and at that point, pick the companies that are down and invest in them, because over time it evens out. So like at some point, say, like Tesla's down and you're putting money in that, then Tesla goes back up with something else down. And I noticed, say recently, so like in the last few days, some of the stocks have gone up quite, in the last 2 days, have climbed quite considerably, but Palantir went and dropped. And I'm sitting there going, okay, well, like I have a tiny bit of money that I need to put somewhere. Well, I'm going to put it in Palantir. And it's interesting because if you have a plan over the next few months, for example, to go and invest in a small portfolio, like say 12, 15 companies that you think are particularly great value at the moment and you really feel like there's a big upside, then if you're always picking the one that is down, then as long as over time you continue sort of just putting it across all of them the same way that you would normally, instead of just every time you're putting money in, dividing it 15 ways, you could potentially go and eke out that 1-2% difference on all of your investments, because you're not picking, oh well, today the big winner is up, so I'm not going to invest in that, so I'm going to invest in something that pays me 1% dividend instead. But if instead of doing that, you're always picking from your selection of potential winners, then the beauty of that approach is that you can eke that 1-2% a year out without having to really do that much, just by making sure that, and I do this every time I invest money, I'm just looking at the moment, what is relatively out of my small portfolio, like small range companies that I'm currently investing in, what is particularly cheap, and I put most of my money in that. So for example, like with CCIV, it fluctuates a lot between roughly $20 and roughly $27. And it rose to about 26, and I stopped putting money in as it was rising. It's now dropping back down. By the way, what is CCIV doing? Because it kind of hovered at 23. Yeah, so at 23.5, opened high and then dropping down. And I'm kind of thinking that CCIV, for anyone who hasn't watched any of my videos, is the SPAC that's merging with Lucid Capital. And they announced some really interesting news yesterday about an acceleration in their production, which doesn't seem to have affected their share price in any way whatsoever. I don't know why. To me, that's really material news, but to the market, it doesn't look like it is. But anyway, CCIV is a good example where I was plowing so much cash into them when they were at $18, $19, and I probably bought, $10,000 plus of CCIV, that sort of range. But I have put absolutely nothing since it went above like 22.50 and went all the way to 26, because my view is that there isn't going to be a material shift in value over the short term, and there's fluctuations up and down. And it's not like I don't like CCIV. If I only had one potential winner, I'd still be putting money in. But there were other companies that were relatively cheap. AMD is a good example. AMD dropped in value and was going back down to about $80. And I was sitting there going, wow, what is happening? So I began shifting my attention there. And that's just an interesting trick. It might not always work, because sometimes the companies that you could invest in will begin going on a run and you might miss that run. And, people will have all kinds of reasons, but it's just one that I employ and I enjoy, and I think it's a pretty good one. So there's a free tip for anyone who likes random tips that they need to go and check themselves and make sure they don't do without ensuring that they're happy doing it. But anyway, somebody's asking what's up with my stake portfolio. For anyone that hasn't been watching, I've got this little side project that I started where I'm trying to beat the market by picking stocks on Stake. And Stake is probably my most favorite platform at the moment for investing in the UK, because I predominantly invest in US stocks and they only allow you to invest in US stocks. You can't buy ETFs, you can't buy any other countries, you can't do anything else, you can't buy commodities. They don't have ISAs, so that's a down, but I I'm in a privileged position where my ISAs are sitting with trading 212, and I'm planning to go and put a bunch of money into that later on. There's actual there's reasons why I'm not doing it right now. But anyway, that portfolio is doing really, really well. I'm 10.2% up, and that's with the majority of this money only went in, I think, a week ago, 10 days ago. And the rest went in a month and a half ago or thereabouts. So far, it's doing really, really well. And I'm actually going to be probably moving out of some of these positions at some point soon, because some of them are growing quite well. And by the way, if anyone's interested in trying the app out, it is really good. It's the only one in the UK, I think, at the moment. I think I'm right in saying this. I might be wrong. I can't remember the specifics on IG but they're the only, I think, major one out of all these new ones where there is zero transaction costs. You don't pay anything at all, and that's quite unique. So the only money you have to pay is when you deposit money in and take money out, which is 0.5%, quite expensive compared to some of the other apps. But when you're doing the trades, you don't have to pay anything. So you're only doing that 0.5% once when you move money in and once when you move out, but there's nothing on the actual individual trade. So unlike Trading 212 or FREETRADE or any of the other ones, even though their fees are lower, each time you buy and sell, you're going to have to go and pay them. So it's like 0.3% to buy into a company and then get rid of them. And then if you buy into another one, that goes up to 0.6%. Anyway, if you use my link in the description below, you can go and get yourself a free share. And their free shares are really nice. They're actually better, I think, for people joining through these affiliate links than the other ones, because the lowest one is GoPro. And what's the price of GoPro at the moment? $11.72. That's the cheapest share that they do on the free share deal. So if you want to go and give them a try, you only have to put 50 quid in to get that free share. Go and use my link in the description below. I'd be very grateful, because I get a small commission my way as well, roughly equivalent to what you would get with a free share. But you can get Nike, which is $140 something or whatever it is. So anyway, so that's doing very well. But it's not surprising, because today everything is green. What's happening with the market overall? The market overall is at 50. The market overall is not really moving very far, is it? Let's have a look. We're on 1 minute. Is this the S&P 500? Yeah. Okay. And the market is not doing very much. There's a lot of sort of movements, but if you look at the scale, these are tiny fluctuations. So the market is staying flat. So it's sort of like the opposite of what we were seeing in February and March time, when all the tech stocks were sliding in a big way. So we're just seeing this, like Tesla went from 900 to 600. We were seeing all the big stocks slide. Like AMD went down from 95 to 82 or whatever. But S&P 500 was just sitting there going, slowly moving along, proving all of us idiots wrong, showing that if you just invest in the market, you don't get to lose money when the rest of the people who don't bother to try to pick their stocks don't. But now we're seeing the opposite. Hopefully, maybe this is the beginning of something good. We shall find out, because a lot of people who were heavily investing in the beginning of the year into tech are now down quite a lot, especially people who are investing in the likes of Tesla, which was very, very popular. Everyone's talking about it. How many stocks do you have in your retirement portfolio? It's a good question. It's actually probably applicable not just to retirement portfolio, but just in general. There's this big kind of thing in the world of investing, of everyone talking about diversifying their investments. And diversifying your investments is really important, really critical, and it is a good thing as an overall general concept. But I think, and this is my personal view, I think a lot of people in the sort of like community of content creators and people who write website articles and stuff like that, I think take that concept too far from my personal perspective. And the reason I think is, if you go and try to diversify by investing in absolutely everything, so there's people who are like, I want some dividend stocks, I want some stocks from different countries, I want to be invested in pharmaceuticals, I want to be invested in tech, I want to be invested in all these different, some big stable companies, some, like up and comers. They end up having a portfolio where they have like 60 to 80 different companies or index fund mixes and different kind of things, and they have a bit of gold in there to counter, because gold does the opposite of the stock market. So when the stock market falls, my gold goes up. The problem with that is you're trying to, essentially, when you're picking stocks, your objective ultimately is you're trying to beat the market in which you're playing. So if you're picking stocks from across the world, you're trying to beat sort of the world stock market index. If you're picking US stocks, you're trying to beat VTI or some other like total US market stocks. If you're buying big blue chips and big US companies, you're trying to beat the S&P 500. Because ultimately, if you weren't trying to beat the index from which you're picking, you could just go and buy the index, and the index would just do it all for you without you having to do any work whatsoever. But unfortunately, a lot of people, when they get into this position where they're buying, like 60 to 80 different companies, there are several different things that happen. One thing that happens is there is absolutely no way that you are keeping your finger on the pulse for each of those companies in trying to value what is your perspective on their outlook and performance. How has that changed over the last quarter? What are the news? Are there issues with some of their factories? Are there legal issues? Are they maybe rumors to be doing a merger? There's no way that for 80 different companies you can be actively doing that to a proper degree. So you're probably not managing those investments as well as if you had a smaller amount. The second thing is there's no way you can get a proper valuation on each of those, because I did a very, very quick sort of back of the envelope kind of valuation on AMD yesterday. And the reason is because when I did a much more in-depth one last time, nobody watched that video. So when I talked about AMD earlier today, well, I filmed it yesterday, but the video came out earlier today. It is very rough and ready, but it still took me a few hours, because each number, you really need to go and really think about it, what you think is right. And there's no way that I could do that, every quarter for 80 different companies. So a big investment fund might be able to do it because they have dedicated teams. They have their, every day they're working 100% on it. I don't spend 100% of my time on it. I don't spend even 2% of my time on it. I have other stuff that I do, my work, making videos and stuff. And I think the problem is, if you have these large portfolios, you're diversifying to a point where, well, you might as well just be invested in the index, because when you're trying to beat, you're kind of saying, well, I think that within this range of say 500 companies, there might be 20 that are significantly undervalued. And I'm going to spend my time trying to find out what those 20 are, and I'm going to go and put my money in them. And it's good to go and diversify to a degree, have maybe 12 or 15 or maybe 20. It depends. Different people will have different kind of sweet spots where it's big enough that if 2 or 3 of them end up being big losers, then the other ones will pull it up, and probably you'll still get a pretty decent return on average. It's kind of a really bad idea to go and pick just 2 companies, or do what I'm doing. Don't do what I'm doing, which is have a ridiculous chunk of your portfolio sitting in Tesla. And it was at much lower. It was 20%. But because of the price collapse down to 540, I was buying a ridiculous amount at 540. But anyway, don't have a huge chunk of your portfolio in one, because then you kind of negate that point of diversification. And with my pension, I actually do the same thing, because some people say, oh, with a pension, you need to be careful. It's long-term investment. You should put all your money in the index because, you don't want to have the risk. I don't care. I am probably 30 years away or more from the point of which I'm going to be retiring. And the stock market is going to have fluctuations. And I am so early on in that journey that I am able to go and swallow these. If I was 55, I'd probably have a completely different outlook. But this is the point where people who are older will often tell people who are younger to do something because they believe there's only one strategy. And with pensions, as with long-term investments, the strategy should be different depending on which stage of life you're in, when you might need that money. If you might need that money in 12 months because you're buying a house, you might have a very different strategy to if you are investing for the long term and you only need it in 15 years and you think that investment might be the college fund for your kids or something. Everyone has completely different ways of managing their finances, the timeframes over which they're happy to. And say with the stock market, if you have a big crash, we are running at the hottest point in the stock market that we've seen in history. Not hottest in just absolute terms, but hottest in the sense of, stop doing this. This is not good. Okay. Let me just open S&P 500 here in plain old Google. Okay. Look, just look at the spike we've been seeing. If you kind of look at it, look at the rate at which we're increasing. Since late March last year, the rate at which stock market has been growing is unprecedented. It is the highest we have ever had, literally in history, in terms of a rebound and then following a crash, but then also just as an absolute period of growth. And the fact is, it is hot. It is so hot that every metric that you look at will tell you that now the market is so overvalued that it should be falling down. We're overdue a crash, even though we had one last year, and it's quite rare. There's only been a very small number of circumstances when we've had 2 crashes within an 18-month period, but we have had them. We haven't had them in the 30s. We had them in 62. It does happen. So history says like it does happen, and also things can happen in unprecedented times that are unprecedented, and we are in somewhat of an unprecedented time in several different ways. But having said that, if we then go and kind of despite the market being so hot, if you're trying to invest over a period which is 10 years, 15 years, if you're investing in companies that are growth stocks, that although inflation can hit them, and although growth stocks can get hit by like anti-hype, if you like, when the stock market collapses, you kind of have this effect where those are also likely to be the stocks that are going to be driving the recovery after any crash happens. And although a lot of people will point to the dot-com period, I think investing in a growth stock that is based on fundamentals, that is based on value, that is based on real product, is very different to investing in something where the predominant driving factor of its share price is hype and sort of future potential that is not currently quantifiable. Because that was very much the case with a lot of the dot-com businesses. It is currently the case with Bitcoin. And some people will say, well, Bitcoin can go a hell of a lot higher, and it could. But ultimately, the current price of Bitcoin is not driven by material, like model-based maths, is driven by hype and potential that is currently not quantifiable. And the problem with those types of investments is they can crash incredibly hard. And sometimes they crash almost all the way down to zero, and sometimes they never recover. Sometimes they continue going up, and sometimes that unquantifiable potential of the future actually materializes and becomes quantifiable. And at that point, it is actually, people who invest at the beginning will say, well, look, I told you so. I told you, when I was saying back then that you should invest, I told you. And see, it's all now come through. It's that risk reward thing. It is a very high risk investment that could have very high returns, which it has been having, but it can also all disappear very quickly overnight as well. But anyway, so in answer to the question, in a very long-winded way, I typically try to keep between 12 and 15, maybe slightly higher sometimes depending on the situation. The core companies that I'm invested in, I have very small holdings and some others here for historic reasons and just out of fun, because I just don't want to sell my £20 holding in something. I want to hold it to see what happens, because otherwise I'll forget to check back. But largely speaking, I hold a relatively tight number of companies, because if I expand, I can't really value them properly, I can't monitor them properly, and I'm kind of beginning, if I hold 60 to 80 large established US companies, for example, I might as well just be invested in the S&P 500. I'm kind of like not like, especially some of them are big, because remember the top 10 companies in the S&P 500 are responsible for, I can't remember what the exact number is, like 22% or something of the total value of the. So if you among your 60 to 80 companies have Apple and Tesla and Google and Facebook, then you are already like being hugely overexposed. You're basically just manually replicating an index in a really bad way. So I kind of like always despair when I see these portfolios, people saying, oh, it's really good to be all super diversified. I'm like, well, it is and it isn't at the same time, because there isn't much point in being an active fund manager that is so hugely diversified. Like, for example, like I know ARK is slowly shifting towards having like more and more companies. I think like they're sort of approaching having 60 funds in the ARKK, which I think is getting a little bit high, because almost all of their investments are US based. They hold some bigger companies, and it's kind of, and I appreciate that at the moment that probably is the case, because they have kind of tried to bounce from the high growth focus to what they said were value stocks, although there hasn't actually been as much rebalancing. Kathy Wood in interviews is saying all this, but it's not really happening if you look at the numbers so much. But anyway, what's this platform for? What I'm not sure, Rabab, I'm not sure what the question is. If you can rephrase it, that'd be very good. But what if people can share their views on what's happening? Let's jump back and see what's happening with Bitcoin. It's 33.9, so it's kind of chilled down a little bit from this high that we're seeing when I first opened the video. So we're sort of dropping a little bit, and within the hour it is sort of fluctuating, but still a big jump up of 15% in the day. Oh my god, this is going to get a lot of people excited, because along with this, all the other cryptos kind of mirror Bitcoin's price movements. So all the other cryptos are going to be doing the same, and everyone's going to be saying, oh, I told you so. Dogecoin is up massively today. What is the price in Dogecoin? Oh, what is it? Yeah, 38.9% in one day. This is insane. All the people who are shitting it, there's so many YouTube channels out there, people on social media who just love talking about it like non-stop, are going to be going crazy saying, I told you so. It's because of the fundamentals. And I may disagree. I enjoy watching it from the sidelines, but I'm kind of happy. Like it's quite amusing because when I do videos that sometimes cover both sides, I often get people coming to one of my investment videos and saying, "Oh, you're an idiot. You're going to get your 20% a year return. You can enjoy staying poor. I'm going to be getting my 1,000% return in 3 months because I've invested in the latest crap coin going to the moon, Uranus, whatever, Pluto." And maybe I'm a little bit older. Maybe as a result, I've seen what happens when people buy too many tulips. I'm not quite that old, but I think people need to understand the risks. And I think some people don't really understand the risks like they think they understand the risks. But look at that, Fiverr is up. What is happening with Fiverr? Fiverr is up a lot today. 40% up on that portfolio. Oh my God. We're having a good couple of weeks. Yeah, look at that. That is a big jump up. As somebody was saying, I think yesterday when Tom Nash joined the live video yesterday, he was saying that I shouldn't be in Fiverr, should be out. It's already overvalued, and I was saying my valuation is way higher than this. I'm going to be sharing it. If people watch the AMD video, unfortunately, the problem I have is sometimes I go make a more technical video where I go and talk about specific stock, or I talk about like a valuation, and I spend far more effort making one of those videos than I do with making like a regular quick just talk about some news or something video. But the thing is, nobody watches them. Like this video, it is already dying. The one I made this morning about why my AMD valuation is $125. It's infinitely more useful than the stuff that actually gets the views, I think. But this is the difficulty as a creator, because this is my job, right? So I have to go and talk about stuff that I think, is interesting, but I also have to go and talk to people to talk about stuff that is actually going to grow the channel and make me money at the same time, because I literally live off my online content business now. And it's such a difficult thing, such a difficult like line to tread, because I talk about I talk about the popular stuff where there is very little value, everyone watches it. I talk about stuff where people can really learn something. I really like teach something, that I know about. And people often ask me, people say, "Oh, can you make a video on something?" For months. And then I go and make that video. Nobody watches it. It just dies. It just goes to a YouTube grave. And eventually I have to even delete them, because if nobody watches them, that actually hurts my channel, because YouTube keeps trying to show it to people. People don't click on it, and YouTube doesn't think that my channel is particularly interesting. So I even have to sometimes get rid of these videos that I think are quite useful. So if you want to learn something, go and check that video out. I think there's some interesting stuff in there. Wow, we're up to $647 in Tesla. We were over 648 earlier. This is a big day for Tesla. Yeah, somebody's saying people don't want ACGL7. That's an interesting name. Are you an Elon Musk child? People don't want to learn, this person says. People want to be told what to do. That's a tip. And this is the problem, because I like sharing my opinion, and I like telling people what I think, and I like to tell people the reasons behind the things that I think. But unfortunately, I very much don't like telling people what they should do. And I like to make sure that people are aware that they need to not do what I'm doing in cases where I think that what I'm doing is incorrect. Or certainly when I have a particular viewpoint, my viewpoint may be biased. Because, for example, with AMD, a video released earlier, I put a disclaimer relatively high up top that isn't legally required in any way whatsoever, saying that I hold a long position, because of that clears everything up, because it ensures that anyone who suspects that I may be biased has proof that I am biased, because I hold a long position in a stock that I'm saying has an upside. And so naturally, if that influences anybody else to go and buy into that stock, and as a result the share price rises, then I win. And so obviously there's this kind of difficulty where you try to be transparent, but at the same time that probably doesn't do you any favors, because I certainly channels that don't do this, the channels that just tell you what you need to do, or you should buy this stock, don't do any disclaimers, don't do anything, they get lots more views. They get a lot more popular a lot more quickly, they grow much more quickly. But hey, we'll have to find that line. And sometimes people tell me that I overstep that line, because you know, like, I sometimes will do a thumbnail that is a little bit pushy, or a title or something, and people will tell me, oh Sasha, you're just milking the views, you're just doing it for the view. I'm like, yeah, this is my job. I have to straddle that line, right? I have to get close enough so that I get some traction, so that people want to watch videos, but I can't get too high. It's a difficult balance. It's a very difficult balance, and I think people don't appreciate it necessarily. But anyway, by the way, I've made this mug. If any, I'm wondering if I should do it as much. Wait, let me hide my face behind it. It's a joke. If anyone gets the joke, I liked it. It's my own joke, and I'm the kind of nerd that puts my own joke on my own mug, which is, it says, I invest in American repository receipts, and because there is a concept in the US called an American depository receipt, and an American repository receipt. Sorry, an American depository receipt. I can't stop saying it now. Is a paper that allows you to buy into companies that don't trade on a US stock market. So, for example, like, you can go and buy Nintendo, which trade over in Tokyo, and from people who are, say, on an American trading platform or European trading platform, you most often don't have access to the Tokyo Stock Exchange. So you can't go and buy stocks that trade on Tokyo Stock Exchange easily, or you have to go through market makers, which is slow or expensive or something else. But you can buy those companies that trade in the US, and so you can buy the same company through this ADR thing, because you're essentially buying a paper that is equivalent to a stock that trades somewhere else. But unfortunately, I keep mispronouncing it, and I keep saying, instead of American depository receipts, say American repository receipts, and that's kind of interesting because it sounds a lot like what the stock market is in lots of ways. It's funny to me. If anyone else agrees, feel free to use that one. But yeah, I sometimes say stupid things, but occasionally those stupid things sound funny to myself. So anyway, let's look at what's happening in the stock market. What's happening with GME and AMC? I know I don't really propagate any of this stuff, and I'm not a big fan, but what is actually happening? We haven't really had much movement for a little while. Obviously, we had this like excitement over here a few days ago, but not much movement happening over the last couple of weeks, and that looks like it's going to continue for now. There's short-term fluctuations, but the scale is not very big on them. And what's happening with AMC? We've got AMC somewhere in here, just while we're at it. Let's have a look. And AMC is, yeah, hovering around, it's gone back up to 60, but we're sort of hovering at the $60 mark. And yeah, not much excitement here. What's happening with semiconductors? Because I think this is the space that people are undervaluing in such a big way. Qualcomm, not moving much. I had ASML over here somewhere. Where are they? How are they doing? One second. I'm losing all of them. Here we go. They're not moving very much, but it seems to be the guys above them that are doing particularly well at the moment. So Nvidia's doing well. It's a good start to the day. AMD is doing well. Oh, 1 second. We need to zoom in on that. AMD is up to 84.38. That's good. That's good. It's a decent dollar up. So a percentage point. It's nice. Go away, Dogecoin. I don't like you. Nothing personal. What's happening? What's happening with the big secure stocks? I think they're probably doing what the market is doing, which is trading sideways and not doing very much. So I'm wondering whether we're at this beginning phase of this kind of rebound. Canoe, look at Canoe go. Wow. Canoe is an EV stock that is also kind of interesting. They're a lot more speculative, and there's a lot more question marks about their business. But they're definitely not in the sort of the Nikola Lordstown Motors clan of like pretend. So there's definitely like very high risk potential for some really crazy reward too. So they're interesting. They're sort of like went down over here, and I'm keeping my eye on them to see if we're going to get some good prices on them, but they seem to be going up. What's happening with Micron? Micron's going back up. Look at that. That's a good 3% rise. I was saying yesterday at exactly the same time, saying, why is Micron down? Micron was down like over 1%. I was like, I don't see it. It's just somebody held a load of it, was selling it or something. And look, here we are the very next day. Nothing's changed. They're jumping right back up. What's happening with social and communications? Facebook continuing to do all right. If anyone is investing in Facebook and likes proving everybody who was saying that their shares are not worth buying back when they were down here. If anyone is in that clan, congratulations to you. They are doing very, very well. And I think people have belief that they're going to... It's kind of difficult one because there's this trend for the younger people are not using Facebook as much. And do they have the longevity required for them to actually begin making those revenues stick, for the multipliers to come back down? People certainly seem to think so. Twitter, I hold a position in Twitter, and Twitter is doing very well. Yeah, Twitter is doing well again. So obviously not the sort of well that it was doing over here, but growing. And I think this sell-off over here after they published their Q1 results, I never understood it. And I think I talked about it in live video at the time. I never understood why this happened, because when I looked at the numbers, I mean, I understood mathematically, but my view on evaluation did not look like this, which is what everyone else's did. But anyway, the Twitter's doing well, and Zoom. Yeah, look, we've got a couple percentage points up here as well. I hate these patterns. So all of that is doing well. What are people saying over here? Nvidia looking hot. Somebody's saying hot until they is not approved. It's kind of difficult because with Nvidia, a lot is hedging on this ARM deal. So for anyone's not sure, hasn't followed it, Nvidia has been in the process of buying ARM for like forever already. And in order to buy, so ARM is the big chip manufacturer that focuses on sort of smaller and like energy efficient processors and a bunch of other stuff. And they have some really cool unique tech. They actually license a lot of tech out, with it's a large part of their business. But anyway, Nvidia has been trying to buy them for some time, and they have to pass US regulators, Chinese regulators, and European regulators. And the European regulators are the slow bit. They've pretty much told, apparently, Nvidia that they're not planning to do any work over the summer. So if Nvidia can go and come back to them at some point in the autumn, then they're going to review it, and then they'll tell them when they can submit the formal application. So it's kind of looking likely that maybe they're only going to get an approval from the EU, maybe like in Q4 or even going into Q1, Q2 next year. So everything's hedging on this potentially for, you know, the future size here, but it's likely that we're not going to see an outcome on that for quite some time. Yeah, good question. I don't know why I haven't looked at it. What's happening with Palantir? Because I have been wanting to buy more Palantir in the next few weeks, but the price is going up. Can you guys stop buying Palantir, please? Because I want to buy more, and this is just ridiculous. Why are we at $26? Why are we $26? Is it like, why can't it stay at 19 for a little bit longer? Because that's when I was filling my boots, but it looks good. 26 is still way below my target. I'm wondering whether people really want those target videos or whether they're not really worth it. We'll see what happens, because the video I made earlier about AMD is not doing particularly well. Hardly anyone's watching it. So unfortunately, I'll probably do them, just not as often as some of the other videos. But yeah, so because I think it'll be good to build up a bit of a backlog. I was actually thinking about doing some videos at some point in the future, saying because I think one interesting thing would be to retrospectively look at every video where I talked about a particular stock that I was excited by and explain why, and then go and look at what happened afterwards. Because I've been having quite a good recent history. Obviously, nothing long term, because my YouTube channel is nowhere near old enough. But it's an interesting exercise. Anyway. Let me just see 1 second. I've lost all my tabs. What are people saying? People want to be able to open a trading one-to account. Yeah, so this is an interesting topic, because I made a video recently saying that it's a bit weird. So Trading212 is a big platform in the UK and in some other countries around the world as well for investing, but they've stopped new accounts in late January. And there was a lot of question marks as to why they stopped. They said that it was for a short-term tech upgrade, and the short-term tech upgrade has now lasted 5 months. For a company that was growing incredibly quickly, that seems incredibly unusual, shall we say, incredibly unusual. And I then made another video. It's kind of interesting because I made a video after they updated their terms and conditions, pointing out that the terms and conditions imply that they're not going to be doing share lending in the way that share lending is normally done under UK regulations. They're not going to be giving you manufactured payments instead of dividends as normally you would with any other platform. So with most of the platforms, you don't even know that your shares are really being lent out because you still receive the dividends, and the dividends are still taxed as dividends. And Trading212 went and updated the terms and conditions, and in those terms and conditions they said that the payments you're going to be receiving from shares that are being lent out may be treated differently. And I appreciate some people saying, oh, well, Trading212 operates in different markets, different jurisdictions. And as a result, they're probably wording it for those different jurisdictions. Unfortunately, the counter to that is if you operate in multiple different jurisdictions which have requirements for different kinds of terms and conditions, then you should provide different kinds of terms and conditions to those different jurisdictions. Any company that operates in multiple markets where they need different T's and C's will do that. But the second problem with that is Trading212 is governed and regulated by the FCA in the UK. They moved all their European customers, as I understand it, because I've seen a lot of emails in December to people saying that they moved them to the UK entity, and as a result, they are legally obligated to apply to UK legislation. And so that means that if they were doing regular manufactured payments instead of dividends, then that whole wording that they've introduced into their terms and conditions, which says that the tax implications may be different, would be irrelevant and void. And so to me, I was basically just highlighting the point that this seems extremely odd. It sounds like they're going to be paying you the payments that are not instead of dividends, but they're going to be structuring it in some other way that, so in 2013, and the Finance Act 2013 came about, which then came through and became law, etc. And 2014 happened, and that Finance Act was upgraded a bunch of old legislation which investment companies, not Trading212, but other investment companies at the time, were circumnavigating with regard to how these kind of dividends were paid, and they were circumnavigating them because of tax, because you didn't have to pay dividend tax if you could circumnavigate them. And the Finance Act 2013 improved on Income Tax Act 2007, I can't remember what the name of it was, and basically shut down all of those loopholes. And it kind of began sounding like what Trading212 is doing is trying to find some new way. And then a bunch of people were contacting me saying, oh, hey, I'm not getting dividend payments. I am getting return of capital payments on investments that should be paying dividends. And I'm getting them with a 2-week or 3-week delay to when the dividends should have been paid. And certainly if you're a finance professional or if you work in finance, then something that is called a return of capital is 100% not the same thing as a dividend. And when I had a whole thread in the Trading212 community pouring hate on me, I pointed this out. And after a while, after like a day, a Trading212 person came on board and said, that's a mistake and we're correcting it. And so the thing I have is, like, I make these videos where I try to highlight things where I think things are wrong. And I get a lot of hate for it from people who are fanboys of the platform or something like that. But then Trading212 themselves will admit that they've made a mistake or they've done something wrong. But then I don't really get any of the people, like the people still continue the hate. They're like, well, you were wrong and incorrect because they've now corrected the mistake. And I'm like, yeah, great. But at the time, if I didn't mention it, nobody probably would even pay attention. And the question is, why was it created that way? And are they correcting a mistake or are they changing the approach on something? Because this is highly unusual. You don't see this kind of wording in the terms and conditions of any other investment app that does lend your shares out, even ones that are international, like Hargreaves Lansdown or anybody else. So the reason I bring this up is because it is highly unusual. It is weird. It is suspect and circumspect. And somebody's asking, they're a new subscriber, do I do day trading? I do not. I don't do day trading myself, and I actually don't. So if this is what you're here for, you'll probably have to go and find another channel, because I don't advocate it for the vast majority of people, because day trading is incredibly difficult to make any meaningful return from for anyone who isn't a professional expert. And the majority of people who do it as a profession, who do it actively, who do it as their 100% job, do not make money. And out of the people who do, I mention this all the time. You probably heard me say the same thing. It's important though. It's an important message. The majority of people, so out of the 100% that try it, only a tiny fraction actually don't lose money. And out of that tiny fraction, the vast majority don't even make the minimum wage for the time they spend trying to do it. It is an incredibly difficult thing to make work effectively, because although a lot of people on the internet will tell you the opposite and sell you courses, the truth is the market is far more unpredictable and volatile than all of the like decreasing triangles and support lines and building, trends and stuff will tell you. That like all of that stuff is pretending that the stock market is far more predictable and far more easy to manage than it is. So I don't advocate that people do it unless they have a particularly good reason for wanting to do it. But hey, maybe I'm wrong. Maybe I'm in the minority. I just think that people can find far better ways of earning money, because there's a big distinction between earning money and investing money that people don't seem to kind of understand. And active trading is a form of earning money. You're exchanging time for trying to make an amount of money. And unfortunately, unlike some other ways of earning money, you even need to put capital, which is at risk in the process. Investing is a way of then taking the money that you've earned and being able to maintain it and grow it over time. And the two are different, because you can't become rich just through investing. You can't go and put $100 into your investment account and suddenly become rich and become a billionaire. Unlike what a lot of people seem to these days think is actually possible. But also you can't just go and earn money only and then just stash. I mean, unless you're, earning ridiculous amounts, the power of earning money and then growing that money that you're earning over time. When those two things multiply, that's when the really good things happen. Anyway, let's go back to what's happening in the market. What's happening with Bitcoin? Bitcoin is up to 34,100. Interesting. So we had this big jump. I've been following. I was busy doing something else this morning. So if anyone can fill me in on what's happening with Bitcoin, Elon tweet something. I haven't actually looked. I haven't been on Twitter today. I've been busy. Fill us in. It'd be good to know, because I haven't actually checked. I have no idea. What's happening with some of the popular stocks in my portfolio? What's happening with Tesla? Tesla's up to $652. Wow. That is a lot. We're almost at $30. That is a big movement. Interesting. What are people saying? People are agreeing. With the investment point of view. Good. Hopefully, it's kind of weird, because I know that kind of point of view of saying, oh, you invest in crypto and you'll become a billionaire. That kind of stuff sells like hot cupcakes. Like everyone wants to like the get rich quick stuff. Everyone wants the how can I with least effort possible just go and invest my money into something, the latest random crap coin that some random person created that is definitely gonna be the future of all world finance, etc. And they say they're going, imagine if it goes to 0.1 cents. Imagine if it goes to 0.01 cents. Imagine if it goes to $1. I'm going to be a billionaire. We're all going to be billionaires. Literally, I just for fun go and look at some of these communities because it's entertaining and interesting. And the majority of the discussion is literally that. They're all posting pictures of themselves with laser eyes and they post a picture of a meet of people who own Lamborghini saying this is us in 2 years' time. And the reason I'm mentioning this right now is not because I hate on this, not because I particularly dislike the crypto community. Mathematically, I absolutely adore crypto. The reason I'm mentioning it is because it is really critical that people understand that this is not how the world works. It is critical that people understand that all of these different random coins that they're putting all of their money into are not going to become the one definitive currency of the future, and it's not going to be worth trillions in market cap, and they're not all going to become rich. And unfortunately, we're in this kind of time when these cult-like beliefs are being propagated and being kind of shilled through social media, and nobody seems to really care. Go and look at the comment section of any of my videos. There's all of these just, I try to go and clear as much of the spam out as I can, but you'll see like this just like endless, buy this latest token, or like contact this guy on Telegram who'll make you rich. It's just like never ending. And unfortunately, for some reason, YouTube doesn't want to do anything about it. Twitter doesn't want to do anything about it. There's people who build entire accounts just talking about this. There's people who build entire YouTube accounts that grow incredibly quickly, just shilling this stuff and, you know, saying how bad everyone who dares to have a different opinion is. And it gets very offensive. That I don't get it. I don't understand how people are not paying more attention to this kind of stuff, because this is going to affect a lot of young people. This is going to affect a lot of money. The amounts of money involved in this are large, are noticeable. But then people just sit there just saying, well, it's all jokes. I'm only invested $100. Who cares, right? Well, anyway, that's my rant. That's my rant over. Somebody is posting CCIV. What's happening? Is CCIV growing? I hope not. Because I'd like it to drop closer to 20. So we can go and buy a bit more. Where is it? It's one of the long ones. Have I got it open? I can't see it. One sec. Here we go. Oh, over $24. Why does it have to go up? Oh well. Oh well. That's what would have been. Anyway, I'm gonna go now, guys. I'm gonna go and make another video. Thank you so much for watching. Hopefully the next video is going to be entertaining and interesting for you. I need to do a bit of research for it, so I don't know when it's going to come out. Somebody's saying CCIV is a dead horse. I completely disagree, while agreeing that in the short term, in the next 12 months, I don't expect much movement at all. Maybe in the next 9 months, much movement at all in the price. But, thank you so much for watching, guys. I really, really appreciate it. And I'll see you guys later.